Hello, everybody, and welcome to Trading Places for this Tuesday, December 10th, 2024. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and it's a pleasure to be with you on this Tuesday. I do apologize to those of you who were on our live streaming earlier this morning. We were having some technical difficulties. We'll get those ironed out for next week, but I did want to do a quick recording for today to at least give you my thoughts a little bit on what happened yesterday. And also we'll take a little bit of a look at what's happening this morning, as this is now during the live trading session on Tuesday. So let's start off first going over the indices from yesterday. You can see that the transportation index was actually the best performing among the six that we like to watch, the key indices. Russell 2000 held up a little bit better than the other indices. Same goes with the mid caps. And then you can see the Dow Jones, the S&P, and then especially the Nasdaq 100 were the bigger losers on the day. Everything was red, but everything was also down less than 1%. It did kind of lead to what looks to me like the market's rolling over here just a little bit. But I got a couple charts that we'll take a look at that we can maybe use to watch to see if we get further confirmation of a downtrend or whether this is more likely to be sideways consolidation. But we'll look at that in just a minute. The key sectors, healthcare and real estate, two defensive groups, actually led yesterday and were up. All the other groups were down, but you can see materials, consumer staples, energy, these rounded out the top half of the sectors. And when I look at those groups, we're talking about value-oriented companies, dividend payers, defensive, that sort of thing. And those are the types of areas that normally lead during the month of December. So that's not too surprising. Down toward the bottom, you can see communication services had a very rough go of it yesterday. Financials were down. I saw many of the bank stocks were down yesterday, heading back perhaps for 20-day tests. Some might be a little bit below. So it's going to be pretty imperative that these groups turn back around fairly quickly. Technology and consumer discretionary, kind of in the middle of the pack, but still down as well. The 10-year Treasury yield this morning, actually back up a little bit. Yesterday, we had gained some ground, but not through the 50-day moving average. I'll get that latest here on the Treasury yield. We're up today back above the 50, but kind of one of the themes for the major indices, it's kind of similar. I'm seeing a similar setup here on the TNX, and that's because we're down below the 20-day moving average, but now we're back above the 50, so we're kind of squeezing between the two. And so for me, it's just a question of which one goes first. Do we get back up above that 20, or do we roll back over down below the 50-day moving average? I think that'll have a big impact on which direction the Treasury yield moves in the near term. So that's something I'll be watching short term. Moving on to the Dow, I'm going to give you an update because, like I said, we are now into the trading day. So we'll take a look at exactly what's happening today as well. We are down 190 points on the Dow. Remember, it was just, 4 days ago that we closed above 45,000 for the first time ever. And since then, we've had 4 straight red-filled candles. And this is consistent, really, with what we tend to see during this period of the month. I mean, through about the 5th or the 6th, the market tends to be pretty strong in December. But then once you get past that time, and especially from the 9th to the 15th, that's when we see a bit more selling. Now, that's historically. Doesn't happen every year. It's not a guarantee, but it's just a little bit of a caution flag, if you will. Something that I at least acknowledge is there. I tend to get away from leveraged products on the long side. I don't think that's smart at this particular time during the month, whether the market goes up or not. We do have that historical warning sign, so I pay attention to that. I've also kind of moved a little bit more into defensive areas like real estate. Because I just feel like, again, these are areas that typically lead the market in December. They haven't gotten off to a great start, at least real estate hadn't. And I'll pull that up for you right now, too. Let's take a look at real estate. So real estate, and it's down today. It's down actually about 0.8%. So it's kind of going down with the market. But it was trying to make this turn back above the 50 and 20-day moving average. I thought it was going to. But it looks like today we're seeing some short-term weakness. So unless we get a rally off of this low, because right now we're challenging the recent lows. It looks like maybe we're just below them, but let me double check that. So the low last Thursday was 43.55. Friday was 43.56. Yesterday, it looked like maybe we were turning the corner back to the upside, but now today we're sitting at 43.49. So we have made a new low on real estate. So I'm not sure that real estate, at least not now, is a great hedge. It seems like it's going down with the market. Like I said, I thought yesterday maybe we were getting a little bit of a turn, but today going back to a new low isn't a good look unless it's a really quick move down and then right back up. But that remains to be seen. And that's something, again, I'll continue to watch as well. Looking at some other areas, let's pull up that S&P 500. And you can see we're just down slightly on the S&P. The Nasdaq 100, we're actually up here. We gapped up. We're kind of holding on to 0.25%. It's nothing big, but we are seeing a little bit of a rally there. And small caps continue to be under pressure on a relative basis. We saw a little bit of strength yesterday. Today, not so much. This is going to be a key area. We're right on the 20-day moving average. And if you look at this, we've got higher prices and a lower PPO. So if we don't hold this 20-day moving average, I mean, I think that's a very slight negative divergence. But if we don't hold this 20-day moving average, we could set up for another 50-day test here. And again, this is the week when the market does tend to struggle. So I think, you got to be a little careful, whatever that means to you. Like I said, for me, I get rid of any leverage products. I definitely don't want to be in leveraged products this week, and kind of moving things around a little bit. I have some built up a little bit of cash, but not a whole lot. It's just mostly trying to be a little bit more prudent during what could be a down week, which is a little bit more defensive areas. But as I just pointed out, the XLRE is one of those areas that I was looking for some shelter. Not really getting it this morning. I'm going to go back over to the sectors because I want to update this and see where we stand today. Because it looks like with the tech or with the NASDAQ leading, we probably have some of the more aggressive groups leading right now. Communication services, which was the worst performer yesterday, is actually the best today. I did see in pre-market that Google was up. I don't know if, let's see if that's what's leading, if it's internet. That was not what I was looking to do there. Giving me the sectors. Let's go back over here. All right. So anyway, communication services leading, energy next. Those are the only two groups up today. So the market's going to have a problem unless that changes. The market's going to have problems staying higher. Technology, you can see, is down today. So that just tells me that, we've got a little bit of weakness. I do want to pull up these. So let me go into a different area and pull up sectors a different way. There's a sector summary. All right, now what we'll do is we'll pull this up, communication services. So we are seeing strength in internet. That's literally what is taking communication services higher today. If we go back here and look at technology, I wanted to see what was going on in technology. Semiconductors slightly higher, but that's the only area in the technology group that is gaining ground today. So we'll see if that continues. The semiconductors, you can see over here in terms of scooter. If we put these in scooter order, semiconductors, the only group they're beating right now is renewable energy, which has been horrible. So semiconductors not doing well, certainly not a leader, but today at least we are seeing a little bit of a rebound there. We'll keep an eye on that. Talked about the 10-year Treasury yield. All right, so let's go in here to look at, I wanted to pull up that semiconductor group. So here it is up 0.6% right now, but you can kind of see it's just going sideways. It's not really in a trend to the upside or to the downside. I feel like we topped back in mid-June, third week of June. And then since then, we've just sideways consolidated. And right now, I mean, if you want to talk about, kind of the poster child of sideways consolidation, it's when your 20-day and your 50-day are exactly the same, which is about what we are right now. 50-day is at 19,672, 20-day is at 19,676. So literally, there's no direction whatsoever on the semiconductor group in the short term, which isn't great because the overall market had been trending higher. So it's been lagging simply by not doing anything. One other thing, let's go back to those major indices. I want to pull up a couple of things quickly. I want to go to the hourly chart. Here's the S&P. And this is what I was referring to when I was talking about the 10-year Treasury yield. See how we've kind of dropped here on the 60-minute chart, and now we're trending below this declining 20-day moving average, and we've dropped below the 50. This configuration right here is a lot different than what we've been seeing over the last few weeks, and it's occurring right on December 9th and early on the 10th, which is that period historically that we tend to see more sideways consolidation, maybe a little bit of selling, but just historically not nearly the strength. And in fact, there are negative annualized returns for most of these days in this period. So, I think we just lower the bar here this week. Let's try to get through this period. And then I think as we start move on to the second half of December, I think we'll see that things really, really pick up for the market. At least that's what I'm expecting. If I pull up the NASDAQ 100, it's doing better. And you can see it's actually worked its way back up above the 20-day moving average. So does that hold? If it does, I think it's very bullish. I think it starts to look more like sideways consolidation versus a sell-off, which would be good. It's a little bit odd if we look back historically because the NASDAQ 100 tends to lag during the month of December. Even though December is a good month, NASDAQ 100 tends to lag behind the S&P 500 and the Dow and even to some degree the smaller caps. So we'll see whether or not this all continues, but you can see it's a little bit mixed picture. It's a little bit, it's just not bullish. We're not getting the wide participation to the upside. We're seeing some areas rolling over, and that's just generally not great for the overall market. Pull up the IWM, we'll see that there's been a much longer downtrend in play here, and we are seeing much more selling. Maybe we're getting that reversal here off of that 236 level, which was the 20-day moving average. We'll pull that back up again so you can see that. 20-day moving average is at 236.45. We went down to 235.92, and now we're at 236.31. So maybe this is the test just below the 20-day. We'll see if we hold. If we don't hold, I think we've got much more room potentially to go to the downside. Could be another 3 to 5%. So at least kind of keep all of that in mind. All right. I wanted to talk a little bit about an event that we have coming up this weekend. It's really important. If you're not a member, if you're not a current paying member at Earnings Beats, it's really important that you sign up for a big event that we have coming up this Saturday. It's completely free. There's no credit card required, but you do need to register. Julius DeKempenaar, who is a senior technical analyst over at Stock Charts, he'll be joining me on Saturday. If you know Julius or if you're aware of his work, he is the creator, the founder of the RRG charts, which I think is just an absolutely powerful visual representation of rotation in the market. Julius is going to be going over some of the changes that were made at Stock Charts to the RRG. He's going to show you how he uses the RRG and essentially, and I'll be speaking as well, but I'll be talking about rotation as well. So it's going to be a really good, maybe 60 to 90 minutes this Saturday, starting at 10 a.m. Eastern. And so if you click on this link that's on our website, you can see that there's name, email address. Go ahead and register. Again, it's completely free. There's no credit card required. It's simply to make sure that we have room for everyone in our room. So we want to make sure we have a general sense. We already know what members we have and so forth. So we just want to make sure that we're going to have enough room for everybody. Seating is limited though, so that's why it's important to get registered and make sure that we have room for everyone. Anyway, you can go in, you can take a look at some of the things that we'll be talking about and so forth. A lot of information here on this landing page, this registration page. So make sure you check that out. If you are on a mobile device, we've got a slide up for you where you can click or scan the QR code. And when you do that, it'll take you to this page where you can sign up on your mobile device. But we're going to have a packed house. We've already got hundreds of folks that have already signed up. And literally, we just opened it up for registration. So please make sure you register so that we can get you, make sure that you have a seat for the event. Also, Anyone who registers and is not able to make the live event on Saturday, we're having a recording. So, the recording will be sent out to anyone who registers. So please, please, please make sure you get set up for that. All right, just a couple other things I wanted to talk about before we get going, before we wrap this up today. Broadcom wanted to point out they're going to be reporting later this week. This was a chart of the day, or kind of our earnings beats digest um, article that we used yesterday on Monday, sent out to all of our EB Digest folks. Right here, you can see a lot of resistance up at about the 180 to 185 level. I count about 6 different tests up in this area. One there, here, another one here, another one here, here, and then right now we're coming back up, and I'll give you an update, show you where we are right now on this. It's actually down even, excuse me, it's in the semiconductor area, and even with semiconductors up, it's down a little bit today, but anything could happen on Thursday after the close. I think that's when Broadcom reports, but double check that earnings date if you are trading it or if you're interested in it. But I just wanted to point it out because it is in an uptrend. It has been sideways consolidating while semiconductors have been consolidating. But this is one of the stocks that actually has a pretty decent track record in the month of December. So if we do get that good report and we get the breakout, I just want to make sure everyone's aware of what the chart looks like here. 2 more charts I want to show you real quick. One is Oracle. Oracle reported earnings yesterday. You can see the report, or the reaction to the report, not so great, gapping down, testing this gap support and trying to bounce off of it. It'll be interesting if we can get back up and reclaim that 50-day moving average today. That's what I'd be looking for. And MongoDB, a software company, also reported. You can see the stock getting hit pretty hard. Overall, I mean, we're trending up, but you can see where MDB was and where it is now. So it isn't exactly a leader in the software space, and the stock did not perform like a leader, did not react like we might expect a leader. As you can see, a big gap down. And this one, unlike Oracle, was opening above its key moving average, in this case, the 20-day, but is trading now below it. So I don't really like what's going on here with MDB, and I really don't like it as part of the software group. I think there are a lot of other software stocks that I would be more interested in than MongoDB. But just wanted to point out that it is getting hit pretty hard, down almost 10% today. All right, we're going to keep this one pretty short. Just wanted to give you all a little bit of a recap, what I saw yesterday, a little bit of what we're seeing today. And again, I do want to apologize for some of the technical difficulties that we ran into this morning. We'll try to have that all remedied by the time we do our video next Tuesday. So anyway, everybody have a great day. Happy trading, and just be careful out there this week. Remember, this isn't the best week historically, so maybe just lower the bar of expectations a bit. Have a great day, everybody. Happy trading.